Good morning, everyone, and welcome to the On Time, On Target morning show. Our topic of the day today is going to be rising bond yields. We covered this a week and a half ago or so when the 10-year went above 1.7 and kind of peaked out about 1.74, went up to 1.77 overnight. So continuing to be what I would call a problem for the market and certainly a headwind. So if you're in the short-term mode and wondering, what's going on, why are my Apple shares not ever moving higher, which I stare at every day as well because that's what I do for a living. But yeah, it's certainly going to act as a headwind in the market. But we're also going to look at the short-term impacts of that, how it's affecting tech, how it's affecting short-term bonds, and how it's affecting long-term bonds. You should be surprised. It's actually not. It's really only a short-term type of bond problem. But we're going to kind of dig into that. It can be a little bit confusing, but I will shed some light on that today. And more importantly, I'll tie it back to what sort of changes should you make in your portfolio based off of this information. If you're catching us on replay, thank you much for checking us out. Make sure you subscribe as well as hit the notifications bell so you get alerted when these go live every day, which is around 9:15 Eastern or so. As far as if you want to join us live, what you don't see is a chat window and a Q&A window where I'm publishing information for the room real time for trades and long-term, short-term investments, and are able to ask me questions and well for me to be able to respond to them real time. And with that, let's go ahead and get the show started. All right, welcome back, everyone. Here is our lineup card for the day. Just a couple of announcements. Things are changing here at Afterburner Financial. First of all, that, and I say this because first quarter is coming to a close. What an amazing quarter it has been as far as some growth and some of the individual investments we've had. But I will like to announce that I have two interns this summer. Starting on or around June 1st. So that's pretty cool. One of which is in the room this morning. So looking forward to working with you on a daily basis, at least for the summer before you go off to college. And the other one was the intern I had last year, if you're familiar with who I had there as well. Also, I do have an offer out for my first official full-time hire for an operations officer. Or office manager, however she wants to take that term, assuming she takes the job. But again, we're going to meet and discuss the specifics of that and try to make that official this week. We'll see. Hopefully she accepts my offer, and that will mark a change from just me full-time to where now I have somebody work in the office and some of the inner workings things that allows me to be out and about a little bit more. Plus for you that are clients, I have a lot of software that I pay for, financial planning software, portfolio analysis software, which I use internally, but I don't often communicate those things to the client, which I think would be more helpful if I would on a daily basis, but I just surely don't have the time. I ran into a time stop there. So I think it'll help towards the end of the year, really mature Afterburner Financial, which hopefully I'll be transitioning Anchor Star Wealth by then, but that may be a Q3 thing instead of a Q2. So we shall see. But that's I just want to bring everybody up to speed on that. All right, everybody, make sure you have your call sign usage set up as well as your chat window there. Standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence before you act upon anything you hear in the room this morning. Full disclaimer information is available at ototnow.com. All right, as far as our mission objectives, grow our money, protect our money, and live off our money. Well, today, thinking about rising bond yields is really how you have to refocus portfolios based on interest rates, whether they're going up or down. So again, that's one of the major themes that's out there that I look at. And really, this is breaking down into a problem or a decision point for you as an investor. If you think interest rates are going up, that's going to be challenging for the market. Now, certainly they've gone up in the short term. There's no doubt. We look at it every day. And that's the 10-year treasury is how we measure that. If that's the case, anytime you have rising bond yields, it does cripple the market. It puts a huge headwind out there as the money flows out of the market and back into longer term bonds, which have been almost unholdable unless you bought them back 3 years ago, which is when I set up several bond ladders, which now those look fantastic. But bond funds have been hit, the market's been hit. Even I put up, you can see the long-term investments we're going to take a look at. Technology has been hit. And then which is Realty Income, which is a real estate investment trust, that's also been hit. So you're like, where's my escape? Where can I make money in a rising bond yield market? And I would say there's two things. Is it really a rising bond yield market, or is this temporary? That's my take, is this is temporary. I do not think that all of the people who get paid to manage interest rates for us are wrong. I don't think that at all. I think they're right. I think the market has got this one wrong. But none of us know for sure, no crystal ball. So we have to consider, okay, well, what if everybody is wrong and the market is right and bond yields are going to go up? Where do we need to park our money going forward to be able to make the most over time and manage risk and all that? Question A, what is bond yield? That can be a little bit tricky. It's not exactly the interest rate, or the coupon yield. But it's a combination of price and whatever that coupon is. So it can be a little bit confusing. So we'll cover that. All right, tactical objectives there. We talked about already. Excuse me, the flow, long, short, open, short, long. We'll take a look at the headline review. Everything's in the red this morning. So we shall see. It's because of the 10-year up at 1.77. We'll go around headline review. We'll look at long-term investments that are listed, the 6 there, which are mostly tech, bonds, and real estate. We'll get into short-term execution. If you look in the room, let me hit those back to you. I think I had my settings wrong, so I'm not sure everybody saw that this morning there. Should have gone out to everybody. Sorry about that, keeping a secret there earlier. The longs I like a lot, even though it's a red market. So that means it's going to be a challenging trading day. If the market rolls over and continues red, then none of these are going to work. You know that. The shorts out there all are not up to my criteria. They don't have the volume. There are shorts. They are down. They're in the 6 to 10% off window, but I don't really like any of them. So, but I put them in the room in case you want to take something short this morning. You do have some options. All right, contingencies and academic resources are standard. All right, let's take a look at TD Ameritrade Think Pipes. Back out to where we are. This is the S&P 500. Remember, the Dow was up yesterday. S&P, I think, was slightly in the red, and then the NASDAQ was hit. When you look at really the overall health of the market, the bond yields are hitting technology, but they aren't really hitting the overall market. So there's a lot of flow to value. I think that's temporary, but pretty healthy overall. I mean, we're getting ready to bounce off all-time highs, except for technology, which we're heavily invested in. I get that. As we focus in a little bit on what's going on here in the last few days and this morning, get down to a 5-day chart here that you're used to seeing. There's our red that we're having in the morning after, nice move up on Friday. Yesterday started up, ended kind of up, sold off a little bit at the end, but up on the day for the SPY, that is, and then down a little bit going in, but some positive momentum going into the open. So I like that. All right, as far as here's our chart set up for we're going to have the SPY and we're going to have VIPS, which I like the best. TME eventually went higher yesterday after it sold off significantly. So our trade would have worked later on. VIP Shop's a Chinese retail firm. Don't touch it if you don't like it. I do. They've got a $500 million buyback they just announced this morning. Well, during the day over there, morning over here. BNTX, that's your medical, vaccine supplier. Basically in Europe, AstraZeneca has been taken off the table for anybody below 60 due to the issues. So that's bumping all of the non-ASEAN AstraZeneca stocks. And then the last one we need to put in There we go. GSX, which is a Chinese education firm that also has the CEO made an announcement that they're going to buy back. He's using personal money to buy back a bunch of stock. The last long there is TLSA. That is correct. That is not Tesla. That's a pharmaceutical firm. You can check that out on your own if you want. All right, let's go over to check out the headlines and we'll refresh here, see if everything is still in the red. Spaceship launched today. Pretty cool. SpaceX. Oh, actually, maybe it appeared to crash upon landing. That's not good. Uncrewed launch. Okay. Well, that sucks. Hopefully that didn't happen, but that's breaking news, so probably did. All right, here's our futures in the red there across the board. All right, the Europe in the green, looking good. Asia in the green across the board. So that's pretty weird. They're both in the green and we're in the red. So that means I think we're set up for a move up today once the market opens. Dow's in these are yesterday's numbers. The S&P was actually slightly in the red. You can see that VIX really has not moved. Here's your bond yield. This touched 1.77 this morning. Here's the headline that validates that 14-month high. Here's the issue. So we have all these stimulus that went out, and what do you do with your stimmy checks? Well, blah, blah, blah. And is it going to cause inflation? That's the thesis that this is causing this belief that there's going to be inflation. Now that we're going to start talking the infrastructure bill, which we talked about way back, again, where to invest in that. GRID is one of your best bets for a fund that invests in all things infrastructure. But the spending that could come out of this infrastructure bill is going to get everybody up in arms. Obviously, the Republicans lost the election across the board, so therefore they are throwing all kinds of inflation fears out there, whether it's warranted or not. It's certainly the talking point, and the talking points tend to dominate the media, which moves markets, whether they're true or not. So again, we did not have inflation in 2007 through 2009. Yes, we are spending more this time around. I don't think it will necessarily cause inflation. So that's kind of the big discussion out there. All right, this Suez opens back up, so it gets that big behemoth out of the way. Oil above 60 again, and then over to crypto, 59,000. So I think that's closing in on an all-time high. It doesn't say that here, but GBTC was up like 6% yesterday. Okay, on into the hey, I didn't see this. Apple expected to unveil new iPhone, Mac, and watch software. Okay, on June 7, virtual event. Boy, they got out in front of that one. That's not really close to now. But okay, I like all things Apple. Stifle upgrades Alphabet. Again, that's Google, GOOG. Got a major upgrade. I like that. Also, Amazon got we'll see if analyst calls got a huge upgrade as well, saying it's 45% undervalued and is one of the best stock picks going forward. I completely agree. My Amazon position in the book for everybody is not increased to the level of Apple yet, but it closes on it every day. Because I'm generally, most people are maxed out on Apple, so I really can't buy you more. But I'm buying Amazon and Google hand over fist on a daily basis. There's the upgrade to Alphabet. Okay, China tech stock collapse, definitely a buying opportunity. There is so much risk in the, I like these China tech stocks. I am buying them. I get some people are questioning how much I'm buying them, but they're going to pay off eventually. I don't know that it's going to be today or tomorrow, but it's going to pay off. So a lot of trust I need here for loading up on this stuff. But that's when you buy stuff, is when it sells off hard, right? Okay, so those are the issues. So let's talk real quick about technology as we go into the open here. So, the sell-off in tech. Well, okay, that's getting a lot of headlines, right? Oh my gosh. Oh Lordy, the tech selling off. Well, come on, man. The XLK, which is all things technology, is sold off from 139 to 131. Okay, that's what, 6%, 7%. It's not a huge sell-off. We're not doing the tech bubble crash. People are calling it that. People saying this is just the beginning. The XOK is not going to be down here at 100. It's just not. It's too, tech names are too strong. So anyhow, when you hear people talking about that stuff, it's like, well, yeah, the tech names, which we're used to them going up every day, are not going up every day. I got that. But the sell-off has not been huge at all. I'm going to take a look at some other names over here on Schwab real quick. So you see 6 panes up here on Schwab. You see the XOK we just talked about. I mean, look at that chart. This is a year and a half. Hardly even flinching up here. The QQQs, which is the NASDAQ. Everybody thinks the NASDAQ is crashing. Flinching is the best we can do. Is it's flinching. FIXD has been hit pretty hard. And you know, this is like 2 or 3%, but for a bond fund that's supposed to go up 2 or 3%, it does give out a monthly dividend, so you're getting paid along the way. I do use the FIXD heavily. IEF I wouldn't touch. Good thing, right? Look at that thing selling off. This is the 7 to 10 month treasury fund, which I don't use, but it does pay monthly dividend. It's sold off significantly. What has not been affected is the long-term bonds. HYG is a fund of high yield. So now you're thinking 5% to 7% bonds, which is a little higher risk. And further out, like 20, 30 years, hasn't flinched at all. So if you think inflation's a problem, these things would be flinching. They're not. Long-term is not. So this is a short-term problem it's manifesting here at the short-term level. And then O is real estate. It's realty income. Again, got hit hard in March, kind of stabilized here, really hasn't gone higher. That's a place where I park money for safety. So as well. All right, let's go over to TD Ameritrade set up for the open. Again, we have 3 names to look at. Give me just a second. Morning, everyone. Welcome to the On Time, On Target play of the day. We have 4 screens in front of you. On the left screen, we have the S&P 500, which is in the red for the futures, but does have some positive gains or momentum going in. We have VIP Shop was my number 1 long. This is a Chinese retailer with a buyback program. We have BNTX long, and we have GSX long, another Chinese name. There is the open. Welcome to Tuesday. Hopefully this thing doesn't just scream higher on me because I want to get a decent entry point. When you think $30 stock, you think a 30-cent stop. So good, it's coming in here some. It's going to set the low of the day. Right now is 30.26 is the low of the day. We'll zoom in here to make this a little easier to see. Then when this turns around higher is when we're going to take this thing higher. So 30.10, so 30.40 would be our entry point here. If it goes up to 30.40, we're going to be in. Patience, there's 30.40. Maybe you didn't get 30.40. It might have been 30.43 or so. We're going to set this exact at 30.10, low of the day. And again, this is a long. So what's going on in this name now that we're in the name is a $500 million buyback. 500 M. That's half a B for those that track the money numbers out there. That is a huge buyback. If this comes back down to 30.40 and you can pick it up there, do so. Don't take it here at 30.50. So do be picky where you grab it here. All right. As far as let's zoom out, we'll get some stuff drawn on the chart. We'll talk about exit points. All right. So 30.70 is our first R unit. We're holding out for 3 R. So 31 is the second R, and then 31.30 is our exit point. So that's your math. You have our entry point here at 30.40, stop setting in at 30.10, and then the upside is going to be 31.30. So we're going to let that cook while we look at some other names there. That's probably a better chart for you. Okay, what's going on in BNTX? Again, you're thinking a dollar stop here, so it's really moved up an R, so can't really get into it there. GSX, this is the one where instead of the company for VIP Shop, VIPS, they announced a $500 million corporate buyback. The difference in GSX is the CEO has said, I'm going to put 50 million of my own money, so out of pocket money, into doing a share buyback. Well, come on, man. That's also called buying the shares. It's not really a buyback. A buyback truly means that the company is buying back those shares and then retiring them. They're not sitting on them. They're actually retiring them, which reduces the float, which that gets you in the supply and demand thing. And of course, if they pay a dividend, then for any shares they retire, they don't owe that dividend to a shareholder. Where the guy in charge of person in charge of GSX, does get the dividend there. So it's not as strong as the announcement for VIPS. All right, we'll use this right screen, GSX, to take a look at some of the shorts that I mentioned that I don't like, see if they work. B-Fly, don't know what they do. Butterfly Network. Well, they did sell off pretty good. Here's your earnings down here, as you can kind of see. Missed some earnings and selling off 10%. Again, low volume here, so that's why we really couldn't get it, and that's why I said I didn't like it. All right, let's look at CLDX. Celldex Therapeutics, down 7%. Again, low volume, so you can't really hop in this, but shorts working out. All right, we're in the red here. If you are interested in this trade and you didn't get it, you really need a green bar to be able to get in here, since there's a lot of negativity. So hold off, but as soon as this turns green and we get a green bar, you can hop back in. Obviously, if you do that and you take it lower than 30.40, you can extend this down to maybe 30.05. But I tell you, if it touches the low of the day, I think it's going to blow through it. We saw 10-cent TME do that yesterday. So get ready to mark it out of this thing. So there you go. We're out. It touched it. So get my X on here. Why is it not drawing the X? We get the X this way. It doesn't want to draw an X. Yeah, it touched it, so we are out. So if you're still in, you're in at your own risk. But again, once these things hit that low of the day, they tend to continue down. Didn't happen there, but we shall see. All right, so busted trade on the day, down an R in VIPS. All right, what's another short we want to take a look at? GOEV. Down 20% now. I liked it back when it was up in here. This thing has just gone too far. Again, this is from earnings that you shall see here. So don't know what they do. Do have lots of volume, but way too far out of the window for us to be able to take. All right, let's look at, we'll come back. So there, busted it again. If you thought, okay, well, maybe I stayed in the trade. Nope, you're out. It's done. Now, I don't retrade, but this is showing some strength there. So, retrade it at your own risk back long if you want to. All right, let's see what's going on in the world. We have BNTX up, Bitcoin up, Bank of America up. So the banks stand to gain, right, when interest rates go up. Just a short-term thing, in my opinion. But you do see some banks at the top of the line here. DraftKings got hammered yesterday, like 6, 7, 8%. Can't remember it exactly. Not worried long term. The gambler is here to stay, if you will. XLF is the financials across the board. Boeing, it's been all good news lately for contracts and such. So not too many names in the green here, but there are names in the green. Let's see what the pain train is doing. Palantir, another 3% off. Gosh, that puts it probably below 21. Yep. So I'm a buyer here. I was a buyer up in here, so I'm a buyer down here as well. Don't back up the truck. It's still too new, if you will. This wasn't like Apple back in the day when it went below 100. It's just like just buy, just buy. No, not that moment. We need to let this thing kind of do its thing. I don't know where the bottom is. I thought it would hold in here since we were back. Here's 21, right? So generally that's a resistance level, but it busted that. So you don't really know where it's going. If you don't have any, pick some up. If you have some, you can pick up some more, but do not back up the truck. We don't know where the bottom is on this thing. All right, MongoDB is a name we talk about on occasion. Twilio is another tech name getting hit. There's Roblox. Let's see where Roblox is. RBLX. All right, still has this drawn from my line the other day, 64.50. That's where everybody got in from the direct listing. Unless you added, that's your price point. So it's kind of approaching that. I would imagine when stocks do this, it'll probably come back down here in the 62 range. So again, pretty new. It's only been trading for, on its own name for a few weeks. So, you know, I wouldn't be that excited about it. Just let it do its thing. We can kind of come back to it, if you will. They're looking selling off a little bit. I was looking for grid. Let's look at grid. I mentioned grid as the play for the infrastructure fund. Excuse me. Well, mine was thinking about something else there for a second. So really here, let's look at taking all the way back to the election. So here's your election is, when was 11/3, somewhere in there. So here's your election is in here. So certainly after the blue sweep, and there was some contention, but you know, blue sweep's going to happen. So 66, we started buying it back in here. If you're in grid, you're up, even though you don't like how it's acted lately. But certainly it's still a buy here going into the infrastructure bill. So a lot of big names in there that are going to benefit significantly. So I really have no problem holding, you know, buying grid and holding it. Even at this level. Obviously it's better back here, but here you can buy more and no problem with that at all. All right, that is it for, let's look back to our charts. Yeah, I knew this guy would come screaming back higher. We'll see. Okay, let's go to bond yield definition. So real quick math lesson, which nobody likes on a Tuesday morning, but so bond yields. So if you have 100, you know, bonds come out in like $100 increments, right? So, or really $100,000 increments. But when you and I buy them for our portfolios, generally one bond is $1,000. So when you think, okay, $1,000 bond, if you buy it on day one, and it yields say 10%, just so we can do the math and make the math easy, that means that every year you would make $100, right? Following that, $1,000 bond yields 10%. You make $100 per year, right? Bonds pay out twice a year, which, you know, shouldn't make the math too hard. So that's $50 every 6 months. But over the course of a year, it makes $100. Now, if that bond, because it's really a good bond, somebody's like, you know, I will give you, instead of it's worth $1,000, somebody says, I will give you $1,100 for that bond. And you go, well, let's see. If I hold it for a year, I can either have $1,100 now, or I can hold it for a year and have $1,100, and then I can continue to make $100. But whatever, I'm going to go buy a house or Lambo or whatever. So I'm going to take the money right now. So I sell this bond for somebody for $1,100. Well, at $1,100, a bond, and it yields, you think it yields 10%, you would think you would get $110 per year, but you don't. You just get the $100 per year. So if the bond is worth $1,100 and it's paying out $100 a year, that is a 9% yield. So the coupon is 10%. The yield is 9%. Obviously, if you take it to the extreme and sold your $1,000 bond to some fool for $2,000 and it's paying out $100 a year, then the yield would be 5%. So that's where bonds, when they're released, the coupon and the yield are the same. But as soon as the bond goes on the open market, it's going to start fluctuating, right? And which changes that yield. So you can really get into some weird situations with that. All right, let's see if there's anything in here that expected earnings generated and realized on a fixed income investment over a period of time, percentage or interest rate. There's one in here that it's a current yield as a function of the bond's price and interest payment, which is different than just the interest payment, right? And then they're equal if it's at par value. So here you get that face value is a coupon payment, but if you get down to, I'd imagine there's price, yes, current yield is the actual price. So a little bit different of what it's going on in the open market, not what it started at. I will not touch yield to maturity. Everybody sees their favorite calculus and goes, oh, don't even talk about that. I'll do you a favor and not talk about it or anything else down here. So that's all I've got for you today. Just realize there's a difference between interest rate that you're getting and actual yield. That can be confusing at times. All right, with that, I'm gonna let you guys go. We'll see you back tomorrow. Bye.